This is Wall Street Week. I'm David Westin, bringing you stories of capitalism. This week, the world of coffee and what global demand and a changing climate may mean for our daily habit. And creativity from a machine, what generative AI means for the world of art and entertainment. But we start with a story about popularity, the sort of overnight popularity that comes when market players burst onto the scene because of big calls they make or new products they create, only some of which stand the test of time.
In a world of staid predictors of the stock market, Elaine Garzarelli stands out. After a series of on-target forecasts made her arguably the most widely followed Wall Street guru, she was fired last year by Lehman Brothers, reportedly for a combination of being bullish, indeed a bit too much so, when the firm was being bearish, way too much so, and for being too expensive.
Wall Street analyst Elaine Garzarelli became a superstar in the world of finance in 1987 when she correctly predicted an imminent collapse of the U.S. stock market, took her fund to cash, and was proven right just 1 week later on Black Monday, when the Dow Jones Industrial Average dropped 22.6% in a single trading session.
No question about it. She called it absolutely spot on. Her fund actually went up quite considerably in value on Black Monday because she'd put on all these puts as protection.
Bloomberg's senior editor for markets and opinion columnist, John Authers, has been reporting on the markets and forecasters for 4 decades.
Did it work out that well? Not really, because the whole point of getting one really big call spectacularly right like that is that n equals 1, if you get what I mean. There are only so many opportunities in a lifetime to get to call a freak event like Black Monday. Having done it once, there wasn't going to be another Black Monday.
In the decades since Black Monday, other investors and fund managers have made spectacular calls that have brought fame and, yes, often fortune, at least for a time. One investor stole the spotlight in 2020 thanks to the gold rush into big tech, once again showing the benefits of being in the right place at the right time. We have some funds like, for example, ARK Investment,
yes,
which did extremely well for a period of time.
And made Cathie Wood, its manager, probably the most famous investor for a couple of years at least, yes. I think one of the points that you begin to grasp more and more with the years covering finance is that if you really want to make it big, if you really want to make a big return, you have to take a big risk. That's basically an inescapable fact. If you want to be safe, you can be safe, but you're not going to be as rich as somebody else is who has taken a chance and it's come off. In the case of ARK Investment, it very presciently was in early on Tesla. It was heavily into Bitcoin-related stocks, heavily into a number of very small companies that grew very fast in the exciting conditions during the pandemic. So ARK at one point, I think, quadruples during the pandemic year, some such astronomically strong performance.
In recent years, a broad market rally has been good news for most investors, but that can come at the cost of specific fund performance.
It looks like a rocket or trajectory that zoomed up and zoomed back down again. If you stand back and think about whether you should treat somebody like Cathie Wood as an expert who can call the market reliably every time, if you're going to have a return like that, it implies that you're very good at what you do, which in her case is tech investing. This is a person whose talents aligned perfectly with capturing this one moment. That doesn't mean that we should assume that they can guide us further in the future.
Big contrarian calls can be very popular because of the attention they attract and because of the money they make for those who take the leap of faith. But betting against the markets also comes at a price, certainly when it comes to calls that, unlike those of Elaine Garzarelli and Cathie Wood, don't come true, but also in trading off drama for slow, more quiet progress.
The people who do best tend to be contrarians. They have to be. And most of the time, by definition, contrarians don't do that well. Otherwise, they wouldn't be contrarian. And I think that's another fact that people tend to forget, that if you're really going to make a lot of money, you probably do need to take a contrarian bet. But generally speaking, people aren't stupid. The market isn't wildly wrong most of the time, being very contrarian will often lose you money.
It's not just individual market players who can gain enormous popularity relatively quickly. That popularity can also come to new ways of approaching investing overall, things like so-called smart beta.
This was a great idea that got people very excited for a while and has generally now become, it's a phrase I almost never hear anymore.
The term smart beta is said to have been coined by the consulting firm Willis Towers Watson in 2006 to describe funds that merge the benefits of active and passive management. Smart beta funds don't have a manager rebalancing holdings, but they have rules and factors that play the role of a manager.
Well, beta really just measures how much a strategy or a stock moves, and alpha is the performance of the stock relative to that sensitivity to market movements.
Rob Arnott is the founder of Research Affiliates, which launched its Fundamental Index in 2004.
The inspiration for it was Fundamental Index, which was our idea back in 2004. Fundamental Index simply says, why should we weight stocks according to how popular, beloved, and expensive they are? Why not weight stocks according to how big they are in the economy? Now, what that does is several things. Firstly, if a stock is a growth stock priced at a premium multiple, it reweights it down. If it's a value stock priced at a deep discount, it reweights it up. That's not because these aren't good companies and these aren't troubled companies. That's because the good news is already in the price. The bad news is already in the price, so it's harmless to reweight it.
Because they focus on value stocks, smart beta funds may have missed the moment for the tech stocks known as the Magnificent Seven, which have been driving the S&P 500 higher recently. Of the more than 900 smart beta ETFs, about 600 have no exposure to the Magnificent Seven stocks, according to Bloomberg Intelligence.
Rules-based strategies have had outflows. The genuinely smart forms of smart beta have been doing much better than that. It leans heavily towards cheap stocks. Well, cheap stocks have been out of favor for the last 15 years. If you had a growth bias, you beat your value counterparts for the last 15 years, off and on, not every year, of course, but over the 15 years by a very wide margin. And so anything with a bias towards value will have had that headwind and will have struggled accordingly.
While some trading strategies or financial instruments might go in and out of fashion, sometimes what we think of as new products in the market really aren't new at all, like SPACs.
David, in the early 90s, for those of us who are old enough to remember, the U.S. had somewhat of a recession. And so there was a capital shortage. And two very smart lawyers who represented an industrial company that was short of capital and that needed to raise additional capital in the public markets came up with a device that we now know as the SPAC.
Betsy Cohen is a financial technology pioneer who founded internet banking firm Bancorp in 1999 and now serves as chairman of the Cohen Circle, which she co-founded in 2015 to bring more than 10 SPACs to market.
In a way, the SPAC format and structure has really always remained the same and is meeting the same needs. And those needs are a capital shortage within a particular area.
The number of SPACs coming to market peaked in 2021 with 613 just that year and dropped to just 31 in 2023. If we go back 2 years, 2022, it seemed that there were an awful lot of SPACs. It was really almost dominating the market.
It seemed like a lot of fun.
It's come down a fair amount since then.
Sure.
Why has it come down?
I think there's several reasons. One, many of the SPACs did not find appropriate targets. And secondly, there was an excise tax that was imposed if you didn't close the SPAC. And so that was a financial liability that had not been thought of at the beginning of the process. I think that there were enough cases of failure in the market that a company would come to market and then miss its first earnings projections, that it became a much riskier vehicle to use.
Whether it's the latest star investor or hot strategy, what draws us to these overnight success stories is just that. They make for a good story, one that the financial media wants to tell and one that the audience wants to hear.
We as journalists, you make a much better story when you really do tell it with a hero, with a person, with a beginning and a middle and an end. You want to be able to make it into a narrative. Then people will enjoy what you're showing them. Then people will understand the point you're making. But you might help people fall into a narrative fallacy. We in the media may be part of building up people, only to then have to knock them down.
Today, ETFs have become popular on Wall Street. Right now, they seem to be everyone's answer to just about everything. But how long will the love affair last?
It would appear that they are in this country. Now, in many ways, the ETFs can be a superior product. They can be much more nimble. They can trade that much more rapidly, and therefore they can be of more different uses to people. But certainly, my fear with exchange-traded funds, it's there's a line from one of David Bowie's albums, begins with "Fleas the size of rats, eats on rats the size of cats." That ultimately they are. Everybody is just taking a different bite of what's ultimately the same thing. That you're just churning these assets around in a different way without really. It's a little like the complaint I was making about smart beta earlier. That you're without really adding anything.
In a world of growing and rapidly changing markets, it's no surprise that new people and new ways of investing show up regularly, or that we eagerly welcome the next bright, shiny object. But it's one thing to rush to them. It's another to stay with them too long. Because in the long run, we are always reminded that that which varies greatly from the mean shall eventually return to it. Coming up, the big business of hot brews. We talk coffee supply and demand next on Wall Street Week.
You're listening to Bloomberg Wall Street Week with David Westin from Bloomberg Radio. This is Bloomberg Wall Street Week with David Westin from Bloomberg Radio.
This is a story about our habits, those rituals we follow every day and come to take for granted, even as we start sharing those rituals with hundreds of millions of other people.
The best part of waking up.
This is a fine cup of coffee.
Shining ravioli, macaroni, if you want the thing you love.
You did it! Congratulations! World's best cup of coffee.
We are taking around 3 billion cups every day in coffee. This means around 172 million bags of 60 kilos each bag.
Venusia Noguera is executive director of the International Coffee Organization, a group created more than a half a century ago to encourage trade between countries. She says the trend in coffee consumption is moving in one direction.
The demand is growing around the world, mainly in Asia, and also in what we call the producing countries. The producing countries that used to drink a lot of coffee in the past were only Ethiopia and Brazil. Now you have many other producing countries taking a lot of coffee. And additionally to that, we have now China, Philippines, Vietnam, Indonesia taking a lot of coffee together with South Korea, Japan, and other countries in Asia.
All these habits being cultivated around the world add up to big business. According to the analysis from S&P Global, the annual revenue of the industry worldwide has soared from around $200 billion in 2019 to nearly $460 billion today. But as coffee demand continues to rise, production has been inconsistent. In the last 2 years, consumption outstripped supply as bad weather took a toll on coffee farms. That helped send prices of Arabica bean futures surging more than 80% in the span of a year, from 146 in September of 2023 to a high of almost 274 this year.
Coffee as an industry really starts in the late 19th century. That's really when we see the start of trading. So the New York Coffee Exchange opens in the 1880s.
Jonathan Morris is an expert in the field, dubbed the coffee historian. He's the author of Coffee, A Global History, and a professor at the University of Hertfordshire.
Now we have a much more expanded global market. So coffee consumption has been rising, a lot of emulation in that rise. So essentially that's what we're seeing. And the demand for coffee in that sense is ever growing.
A good part of that growth comes from the Starbucks of this world, a phenomenon that may have taken off in Seattle, Washington, but that has turned into an international trend.
So what's really changed coffee in the last sort of 30, 40 years is obviously the growth of if you like, the international coffee shop chains, that kind of format. And I say it's changed it not because it's accounted for a huge proportion of consumption, although it's certainly driven that up, but rather because of the amount of emulation that's created across the market. So coffee as a beverage has become much more popular across the globe.
It's not just that more of us are spending more of our time at our favorite coffee shops. Increasingly, entire countries are getting into the game, quickly developing their own habits of turning to coffee instead of their traditional beverages.
So China as a market alone is now probably something like in the sort of 7th or 6th in the world in terms of volume. And of course, the growth across particularly Southeast Asia as a whole has really driven the big expansion of coffee in the last few years.
Stephen Sutton's job is to meet that demand while strengthening the supply chain. His New York coffee shops specialize in getting beans to customers at breakneck speeds. It can take large chains up to a year to get coffee from farm to cup. Sutton's Devotion sells beans that have been harvested less than a month before hitting shelves. To do that, he uses FedEx to overnight the beans straight from Bogota to Brooklyn, where he roasts around 10,000 pounds of them every week. Within days, they're in cafes, executive dining rooms, and high-end restaurants like 11 Madison Park.
We actually opened doors in 2006, and the whole idea was to do something different locally in Colombia for the farmers and finding absolutely the best coffees that were lost at that time because of the internal conflict of Colombia. So we decided very early on that we would concentrate our efforts of understanding how to go to the farmer, how to, let's say, maneuver the territory and its difficulties at that time, so we can get to the farmer, pay them actually fair wages, because one thing is fair trade and one thing is fair money wages.
Sutton's direct relationship with farmers has been both good practice and good business. Better sourcing can mean better coffee, and that's been a staple of his success.
Actually getting the taste that they got at origin. And that until now is pretty much unheard of. So we averaged, let's call it around 15 days old coffees before roasting.
So that sounds remarkable, but it also sounds remarkably expensive potentially. What's the difference in the price of the fresh coffee, the freshly roasted and ground, as opposed to those things that take 6 months?
So there is a difference, but it's not a huge difference. I mean, you're probably going to be paying $1 more for our coffee. If you take out a lot of the middle people and a lot of the normal process of coffee, you'll end up finding that, number one, the money can actually go to the farmer.
Sutton says that making sure everyone gets their fair share of the pie is one key piece of the puzzle, but another is protecting the supply chain, as the rising impact of climate change takes a toll on growing conditions.
The coffee market has been suffering with supply shocks, especially given weather, because of weather problems we had in Brazil.
Carlos Costa is the chief commercial officer at HedgePoint Global Markets and has spent years analyzing soft commodities like coffee, whose futures point to more confidence in the short-term trade than in the long-term investment.
Cost of production nowadays in Brazil, it's around 700 reais per bag, 750 for Arabica, and the price is trading at 1,400, 1,500. So they are making a quite good amount of profits if you compare cost of production and price of selling. So farmers are making a good money out of that. In the supply chain, if you see other participants, traders, the margin of the trading is not, for commodity trading is not that much. We're talking about 3-5% bottom line. But looking ahead and looking to the future, our sentiment is the volatility might continue to stay on the high level because of the supply constraints we have nowadays, and also the lower level of inventories, which brings more concern to the market as well. But the main history here is that the world has been consuming more coffee year over year, and supplies has not been following that growth in demand, both because of weather situations that affected supplies, but because you also haven't saw so much growth in the majority of the origins in terms of area.
Although production has rebounded this year, climate change means supply volatility isn't going away, and demand will only continue to rise. For people like Stephen Sutton, who see the whole process from start to finish, meeting that demand in the long term means investing in the next generation.
We are very active in doing things for the community and the farmer to protect our stakeholders and where we're getting our coffee from. We go to a local school in Gacheta, and we are teaching these kids about how to do better coffee, how to get better economics. We give them tools from a young age, not only to help them create a business, but also to help us as pretty much all the stakeholders inside of the coffee process to protect where the source is coming from. We like to start building something that's more sustainable, and we think that not necessarily is what should be done. I think it's part of it, but I think it's also part of how we farm and how we teach these farmers how to protect their farm, not only by having coffee, but other things and protecting their environment. If we can do that in a large scale, then I think we will have a good future in the coffee world. If we can't, then I foresee in 2050 coffee being a complete luxury.
Up next, how artificial intelligence is changing the world of art and entertainment. The view from AI leaders and artists themselves. Next on Wall Street Week.
This is Bloomberg Wall Street Week with David Westin from Bloomberg Radio.
This is a story about creativity, something we normally consider to be a quintessentially human trait, but something that machines increasingly seem to be encroaching on.
You really think you can just walk away from all this?
There's no other choice.
There's always a choice.
You just don't like the alternatives.
What would you have me do?
This video was made entirely by AI. It was generated by Runway, which builds AI tools for multimedia content. Cristobal Valenzuela is the company's founder and CEO.
You can think of generated AI as a version of CGI. It's a better version of the things we've done in the past. Imagine a world where you have a system that can create imagery on a real-time basis. Feels like a video game, feels like a movie, but you're generating things that you've never seen before.
All over the world, filmmakers.
It's frightening on so many levels. It's so many people who will lose their jobs.
Musicians.
The way they are learning and the companies developing, it's going to be a threat.
Visual artists.
Every single professional artist I know has been affected by this in not a good way.
All worry about what generative AI could mean for their creative work. And it turns out that they have good reason to worry. A report from January 2023 concludes that more than 200,000 people in the entertainment industry could be adversely affected by AI in 2026, nearly a third of the entire workforce. But for those who can use AI, it's already becoming a valuable tool in the industry.
Screenwriters are using Runway. There's a lot of VFX artists are using Runway. So every part of the production cycle has avenues and spaces where you can augment and incorporate it and improve the process using AI.
Runway is growing fast, training its models to animate and alter already existing images and videos. And its adoption in the industry is little wonder, given what generative AI can mean for a company's bottom line. So this is your studio?
Yes, this is our studio. And so today I'm going to show you a way of creating video that involves no prompts. There's no text. And the idea there is that you can take the emotional, the expression, the performance of the actor and apply it to either an animated character or a live action kind of like element. So, Jimmy, you want to read a few lines?
Yeah. Go for it. No. And you're scared. Okay, disgust. You show disgust, like smells really bad.
So now what we're going to do is we're going to take that performance that Jamie just did, and we're going to map and scan kind of the face to translate that set of expressions and emotions you just performed for us into an animated character. And that happens almost in a real-time basis. It's a couple $1,000s for every second of a AAA movie or like a good movie, right? There's a lot of money being put into just making a few seconds. The approach AI takes is like you can have systems that can aid you in creating all of those things in much shorter times for a fraction of the cost. And so if rendering might take you traditional methods a couple $1,000s, rendering for us is just like less than $1.
To take advantage of that kind of cost savings, entertainment companies are planning to ramp up their use of generative AI a lot. A recent survey showed companies plan to use AI extensively in the next 3 years on everything from sound design and cinematography to voice acting and writing, which may be good for the companies, but isn't so good for the creators.
You know what sucks is like I like these colors and I like the idea, but I would never paint it like that. It's so boring. She has absolutely no emotion in her face.
Kelly McKernan is a classically trained artist in Nashville who built a following with a distinctive style of illustration and watercolor portraits. But 2 years ago, Kelly started finding images on the internet that looked eerily familiar.
Summer 2022 was when I first saw some images coming out of DALL-E and Midjourney and a couple of other AI generators. It was very confusing because I wanted to know how they did that. At this point, there are more images online using my name as a prompt than there are actual artworks I've made. So because of this, between 2022 and 2023, I saw my income drop by 30%. So after 10 years as a professional artist, I'm no longer able to make a full-time living off of my work. For 20 years, I've had artwork online. And so all that art was hoovered up by these companies who believe because it's publicly available, it's fair use. They should have properly licensed these images. We should have been compensated, and at the very least, given our consent, but that didn't happen.
McKernan has joined with other artists to sue several generative AI firms, including Runway, for claims of copyright violation stemming from the company's use of images of their work taken from the internet and used to train AI models. Entertainment IP lawyer Jennifer Wallace believes McKernan and other creators have a strong case.
If the AI companies want to enter into licenses with the companies that own the copyrighted material, they absolutely can do that, but that's not what they're doing. And it's kind of the model of the tech industry, right? Ask for forgiveness, not permission.
What I was afraid of happening did happen, where instead of a company reaching out to me, or perhaps a small publisher reaching out and wanting to commission me for a book cover, for example, They could instead save a lot of money by just going into one of these programs and typing in the image they want and then saying, in the style of Kelly McKernan, instead of hiring me. And this is exactly what started to happen. There were well over 10,000 images through Midjourney alone by the end of 2022 that I could publicly search, where my name was used to create images.
So there's three ways that the industry is going about it, right? There's federal legislation that creates a new IP right for artificially generated name, image, and likeness. There's licenses. So SAG-AFTRA just entered into an agreement with an AI company that generates very realistic name, image, and likeness and voice replicas of its actors. And it entered into a contract that allows the actors to decide if they want to allow this company to be able to replicate their voice and to set their own prices for it. And then you have the litigation that's going through the court systems.
Valenzuela contends that the copyright claim is based on a fundamental confusion about how his generative AI models work, a confusion indicated by the very word copyright, because he says generative AI is not copying, it's learning.
It's good to remember that these models don't copy data. They're not trying to replicate existing data. Like, the goal for a good model is not to create a scene that already exists. There's no point in it. There's no database, so you're not pulling from existing scenes. What you're doing is, you can think about it as a student. You're showing that student many different films, and you're learning the principles of how a camera moves, what different lenses you can use, what a performance looks like, and then you're asking that model to create new versions of what you want. But the things that are creating have never been seen before, have never been generated before.
I'm very skeptical. I could put the history of William Randolph Hearst into a large learning model, and I wouldn't get Citizen Kane.
Whatever the legal issues involved, Jonathan Taplin says generative AI poses a real threat, not to the top of the creative food chain, but to the vast majority of creative artists and writers who make up the core of the entertainment industry, people of whom we may never have heard.
It's not necessarily a real threat to Bob Dylan, but it's a real threat to what I would call the working musician who may get $1,000 a month or a quarter from Spotify.
In the end, the issues surrounding generative AI and its effect on the entertainment industry likely do not come down to the law or even the financial consequences for individual artists. It's all about creativity and whether generative AI holds out the potential for increasing human creativity or drowning it under a sea of duplicative content we don't need.
We've always seen AI as the baseline for a new media format, a new way of storytelling, a new set of creatives and artists. The goal is not technology. We don't build models for the sake of building models. But it's important to understand that technology serves a human need. And if you don't emphasize the human need, then there's no goal. And so we've always want to emphasize that aspect of it, and our aspect is to create great storytelling tools more than anything else.
There's little doubt that AI will make storytelling faster, cheaper, less labor-intensive. But that means it will also cut out the need for people to make thousands of small decisions, like the color of the sky in a movie, or the balance between woodwinds and strings in a symphony. Creative judgments made in nanoseconds by something that's learned from us, but that is not us. Will it be as good or better than what we humans would have done? Perhaps. Certainly the AI models will think so. That does it for this edition of Bloomberg Wall Street Week. If you missed any part of today's program, you can listen on demand with our Wall Street Week podcast. Find that on Apple, Spotify, or anywhere else you get your podcasts. I'm David Westin. Stay with us. Today's top stories and global business headlines are coming up right now.